Normally, trade deals take years to deliver one. So three in just a couple of months is, by normal historic standards, pretty good going.
Ben Powell, welcome to the business.
Great to be with you, Alicia.
Donald Trump has managed just 3 trade deals if you include China, the latest with Vietnam, with a week to go until that tariff deadline. It doesn't look like 90 deals in 90 days are going to materialise. Are investors facing another Liberation Day rout on the 9th of July?
I think we should expect continued dynamism. Normally, trade deals take years to deliver one. So three in just a couple of months is, by normal historic standards, pretty good going. But as you're saying, Alicia, the Trump administration have set themselves kind of a very, very demanding pace. I think we'll have to wait and see. What I would say is I would continue to expect more kind of significant news flow in and around trade on an almost daily basis over the next several weeks. That's something we as investors are going to have to live with and look to navigate.
The S&P 500 in the US is up around 25% since it bottomed in April when the Liberation Day tariffs were announced. Is there a mismatch between how markets are performing and the risks out there?
So we at Blackrock, actually, we've just launched our second half outlook, and we continue to be quite bullish US equities. So, of course, we're not naive to the risks. There are many risks. That's true and important. But on net, we think the tailwinds are now more significant than the headwinds. So tailwinds, of course, in the US in particular, they've just got some really good companies. I mean, that sounds a bit simple, but it's true. So the technology of the future, artificial intelligence, not entirely in the US, but obviously they've got some very huge companies with a particular gearing into that mega force, as we would call it, and they just continue to make more money than even the market was expecting 3-6 months ago. So we still think, on balance, US equities can do okay, while of course being very watchful around some of the risks which are real and important.
If you weren't in the tech sector, though, would you still be doing okay if you're in the US?
Much less so, but the good news is we are in the tech sector, right? So I think we look at the S&P 500, and there's absolutely important conversations to be had about certain areas of the market performing very well, and many areas of the market actually doing not much. So what I would say that speaks to is the importance of actually being a little bit more active. So in a slightly more chaotic world, less predictable world, our take from Blackrock is it's less obvious we should just be what we called risk on, right? We all had that frame for many years. Sadly, I think we're all going to have to do a little bit more work now and be much more targeted, much more specific in exactly what risk you want in the portfolio, be that by sector, geography, or other. So you're exactly right. There is a huge range of kind of performance within the S&P. At the aggregate level, the big tech stocks dominate, and I guess that's why we're constructive. But you're exactly right, Alicia. We need to kind of pick our spots because they're not all equally clear cut, I guess.
When it comes to these tariffs that are about to revert on the 9th of July, could the taco rule, Trump always chickens out, apply to the tariff threats?
I think the US administration has a very pragmatic approach to policy making. So I think we at BlackRock would say we believe them, that they are sincere about genuinely trying to kind of change the world, at least in economic and maybe foreign policy and other kind of terms. So I think that's like a real thing. But they are constrained, as we all are, by reality. So even the mighty Americans can't just click their fingers and change the world's kind of economic system over time. They're doing their best, but even they will have to navigate complexity, reality, and that just takes longer than kind of perhaps it would appear on social media as they work through a reality. So we think that they are serious, but they are constrained by kind of market reality. And therefore, we are, as markets, I guess, we have been really reassured over the last 2 months that they will listen to market feedback, which is to say, if markets kind of get too skittish or too panic, there is some comfort that the Trump administration will adjust in a more kind of positive, pragmatic way as they need to.
The Vietnam deal slaps a 20% tariff on the country. If this is the approach that could be replicated for other nations, can we expect to then see higher inflation in the US and slower economic activity?
Yes, I think so. So tariffs are a cost. We as economists, we can debate exactly who pays that cost, whether it's consumers or producers, but it's a cost. And some portion of that, as I say, perhaps we don't know exactly how much, but some portion of that should flow through, correction, will flow through to consumers, which is inflationary. So I just think that's true. Chair Powell has been talking about this, and his view would be it hasn't kind of shown up yet, but we would expect to see that start to show up in data over the summer. And that's why the Fed has said they've been unable to cut rates so far, is they just, frankly, they don't know exactly what's going on, but they expect the answer to your question, Alicia, is yes, it is going to be inflationary. We're all just waiting for that to show through a bit more visibly in the data.
And Donald Trump isn't backing down on his attacks on Fed Chair Jerome Powell, calling him too late, really wanting rates to go lower much sooner. What's that doing to the credibility of the US, do you think?
I think not much, actually. I think the Fed is a very independent institution. I think Chair Powell continues to act, of course, but importantly, in a completely independent, data-driven way. I mean, I wonder, en passant, if this is actually useful for the Fed to demonstrate that even under kind of quite serious political pressure, indeed, they are an independent arm of government who set policy for the economy and for no other kind of aim. So it's obviously very interesting, very engaging. That's true. I don't want to say it's irrelevant. It's definitely relevant. But we at Blackrock feel very confident that the Fed is truly independent, and Chair Powell will continue to do his job, of course, professionally and in a data-driven way, rather than being, how can I say, moved by some of the rhetoric that's out there.
Well, Donald Trump's big, beautiful bill is being hotly debated in the House. In any case, it's set to raise US spending by over $3 trillion US dollars. How should investors be viewing this?
So in the round, we are, I guess, hoping for growth. And I think there is some plausibly kind of pro-growth stuff that's coming through, not so much from the raw numbers, I guess a bit of spending helps, but more from the kind of deregulatory aspects of the Trump administration's kind of agenda. So that's fine. But on the flip side, I mean, clearly we're talking about deficits getting bigger, really, as far as the eye can see, which should add to a fairly tremendous debt load which is already in place. So that makes us a little bit uncomfortable with US Treasuries, actually. So we continue to be underweight longer duration US Treasuries, which is a bit of a problem, right? So US Treasuries have been a beautiful asset, a great asset in many portfolios for many years. If they're a bit less clear cut, we think they're a bit less clear cut. I think a big question for investors kind of everywhere is what do we do? Do we need to kind of sell a few treasuries and diversify into other assets all over the world? We think the answer is yes to that, and that's something we're seeing actually playing out right now.
Ben Powell, always great to get your insights. Thank you.
Thank you very much.